please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Start of a new series and of course last trading day of 2017, which has been an exceptionally good year for stocks. Ashwani Gujral, Mitesh Thakkar and Rajat Bose now join us this morning. Good morning, gentlemen. Ashwani, we had a near inside day yesterday. I mean, the range has been there on the index. How should you trade this kind of range?
Well, good morning, and the morning could be interesting because yesterday we got the narrow range because expiry pressures, etc. But today, if we start getting follow through again on the banks, then I would think that you can say that 10,530, 550 is holding on. So for the moment, the idea remains to sell the rally, may not be to sell the dip, but I would think that you have PSU banks in one direction and private banks in the other direction. So it will be useful to get short whenever the Bank Nifty rallies. Similarly on the Nifty, whenever we see 10,530 on the Nifty futures, that would be a good time to sell.
Okay. Morning, Ashwini. So, do I understand you right? If it crosses 10,535 seminally, then the trade reverses.
See, if we start crossing this 10,530, 550 zone on Nifty futures with momentum and pressure and all that, then maybe the market is breaking out. But for the moment, the way it's acting at higher levels, it does not seem like a breakout is imminent.
And what would be a similar level on the Nifty? Oh, sorry, on the Nifty Bank?
See, again on Nifty Bank, we are not able to, cross this 550 very easily. Okay. So if you get this, rally into 550, 600 on the Bank Nifty futures, those will be good levels to sell. But I think the market will be more range bound than things collapsing, because we've had somewhat of a trending last week because of Gujarat election. This week and the next week is probably going to be sideways till results start to come out.
Okay, Ashwani, just one more point on this issue. The PSU banks, how would you trade them? Because they had that one big day, and after that it's just been decent profit taking in some of these. Do you think there's more correction which is due for stocks like PNB, Canara Bank?
I would think so, because people are sitting on huge amounts of profit, and this sort of macro news is going to take them lower. So I think there is a definite push on PSU banks on the downside.
Okay, Mitesh Thakkar and Rajat Bose are also with us.
To add one word on that, it's I'm only watching to see if today is the last day. Banks will try very hard to pull the bond yields lower. So, there could be many factors impinging today as well. It can't be ruled out that the Reserve Bank announces something in terms of a bond purchase if they are uncomfortable with yields at 7.4. All those need to be watched, and as well the fact that the Reliance-RCom deal is done could also be a bit of a positive. So, I mean, before throwing in the towel on the state-owned banks, there are a couple of moving parts.
Okay. Well, let's pose these questions to our other guests as well. Mitesh Thakkar and Rajat Bose join in. Mitesh, before we talk about individual stocks, first a word on the index today.
Good morning, Sonia. So, I've been having a negative view on the Bank Nifty since yesterday. We have short positions, and I think the levels of reversal on the upside are very similar to what Ashwini highlighted. 25, 550, 570 is the zone. I think as long as that is not being breached, we'll maintain a short bias. On the Nifty, it looks like that the Bank Nifty pressure is halting the Nifty upward march. So Nifty has gone into a 10,450 to about 10,550 kind of a range. If it breaks 10,450, we'll possibly cut down on the long exposure and look at shorting the Nifty as well for about 70-80 point kind of a dip. So I'm not very bearish, but on the short term intraday immediate charts, looks like a bigger pullback could happen.
Oh, right. Rajat, good morning to you. What is your Nifty trade?
Good morning, Lata. I would say that having studied the Nifty since inception, you will not notice December top. December top is generally, it doesn't happen in our markets. Rather, from 4th of January till about 10th of January, you will find lots of tops are there. I mean, after that, substantial corrections have happened. So I would still say that maybe the Nifty would actually move up and at least scale up to 10,700, the same maybe early next week or any time during the next week or so. Nifty may not really fall below 10,400. On the upside, till such time Nifty clears 10,558, I don't see much of an upswing. I would concur with Mitesh and Ashwini that at higher levels, sell on rallies and buy on dips, depending on the situation. Currently, we are in the mid-range. So if it is close to about 10,525, then I would sell with a stop above 10,560. And if it is on a decline, say around 10,435, putting a stop loss below 10,400, I would be buying. Regarding the Bank Nifty, I would be closely watching 25,490 to about 25,550. But one thing I would like to highlight here is that if the PSU Bank Index falls below 3650 levels, it is close to that. If it falls below that level, then there would be another 3% fall in the PSU Banking Index. That's one particular area that looks very weak. Overall, it would be a range-bound movement in today's session. That's what I tend to think.
Okay. Let's discuss individual stocks then. Ashwini, 2 buys and 3 sells.
See, on the new day, generally, things tend to open higher. So you will get good shorting opportunities as the market opens. As far as stock calls are concerned, Balkrishna Industries a buy with a stop of 1180, target of 1235. GMR Infra is a buy with a stop of 18, target of 25. Syndicate Bank is a sell with a stop of 82, target of 70. Union Bank is a sell with a stop of 149, target of 137. And Andhra Bank is a sell with a stop of 61, target of 55.
Okay. Mitesh, to come to you, what are your buys and sells?
So Lata, I also have a mix of excuse me, a mix of buy and sell strategies. Most of them, I've got 3 buys and 2 sells, and I think the buys are as follows. I have a buy on HCC, which after a big breakout has given 3 days of pullback, so buy with a stop at 39, look for targets of 44. The other 2 buys are Tata Steel, which has managed to make a fresh swing breakout, so I'll be buyer here with a stop at 722 for targets of 765. And the third is a conditional buy on Chambal Fertilizers, and a lot of fertilizer stocks after consolidation are looking to break on the upside. The breakout for Chambal Fertilizer would happen above 154. So once that is crossed, buy with a stop at 147, look for targets of 170. And 2 sell calls from the banking lot. South Indian Bank is a sell with a stop at 31.5 for a mild decline to about 29.5 levels. And Karnataka Bank as well is a sell. Keep a stop at 152.5, look for declines to about 143.
Okay, Rajat, what about you? You have mostly mid-cap stocks on your list today.
Yeah, right. I've got 3 mid-caps and 1 large cap and 3 buys and 1 sell. Bharat Forge, I would be buying. 727.80 is my stop loss, and 738 and 743 are the 2 targets. This is one stock that I also hold in my personal investment portfolio. Apart from that, in the same sector, CG Power, I would put a stop loss below 90.40 and targets would be 95 and 97.40. Incidentally, this is one of your 18 of 2018 stocks. And HDIL, I'm quite bullish on realty. I mean, I would have chosen DLF, but that has moved up considerably. So HDIL 57.75 is my stop loss. 61 and 63 are the 2 targets that I'm looking at HDIL. And finally, I would be selling IDFC Bank January futures, stop above 55.30. Again, a small move like Mitesh's South India Bank, targets 53.75 and 52.85.
All right. Thanks a lot for that. We will come back to you all with lots more questions, but the big story of the morning remains the big deal that we have seen in the telecom space with RelGeo buying up or signing a binding agreement to buy the telecom assets of Reliance Communications. Nitin Soni of Fitch Ratings has joined us on the phone line with his stake. Nitin, good morning. Will this mean a large debt burden for RelGeo, you think? I mean, first of all, what are you placing the deal value at? 20,000, 23,000, 25,000?
Yeah, we don't have any visibility on the valuation, but it looks like around that range because it encompasses not only the spectrum assets, but also the tower and the fiber and the node infrastructure which RCom had. So it could be around that range.
Okay, so therefore the view on our RelGeo, would it be an inordinate burden?
No, I think we rate Reliance Industries at BBB minus with a stable outlook. They have a good robust balance sheet, so I don't think such burden on Reliance Jio is not going to make any dent on the balance sheet. But I think overall the spectrum assets and the fiber infrastructure which Jio will be getting is a very important asset for its long-term investment in the telecom industry, given fiberization of towers and fiber to the home network. And, the fiber infrastructure plays a crucial role in providing the telecom services and the enterprise services, which are quite a sticky business when you provide services to business.
Okay, so no debt burden for RelGeo and a better fiber network. Nitin, what about pricing power? Will this deal help give better pricing power to RelGeo?
No, I think pricing power will come to the industry gradually. Our view is that we have recently revised the outlook on telecom industry to stable. We had a negative outlook in 2017. And we believe that at some point of time, Jio will start changing its approach towards farming its large investment on telecom. So it will gradually increase its tariff. And recently there was a New Year promotion which came out at 199 and 299 rupees, which is significantly higher than the average revenue per user of 150 rupees. So we believe that gradually they will start increasing tariff, remove all the discounts and promotions, and that will turn the wave in terms of pricing power coming back to the incumbents and Jio.
Okay. What would your view be on RCom itself in terms of its ability to finance the balance debt?
So we actually have withdrawn the ratings on RCom. It was restrictive default after following they stopped paying to their lenders and they defaulted on the coupon on the secured bond. But I think it's definitely a positive announcement for RCom. They will get this 20,000 crore to 24,000 crore to repay to the lenders. Good for lenders as well. But I think the rest of the asset might take some time to monetize, because the DAKC land, which is a big piece of land, and I don't think any big real estate developer in Delhi or Mumbai would have the balance sheet to buy such piece of land. So it might take much time to actually realize money from that land, unless they start developing some commercial or residential infrastructure there. But it will take time to get money out of there.
Okay. What about, you said that banks will have a relief. Generally, is your view on Indian banks likely to improve? Especially because this is one of the deals that's getting sorted out. Some more could get sorted out in the NCLT.
So I'm a telecom analyst. I think you need to speak to my bank analyst. I think they will definitely say that it's a good for banks who had exposure, especially for State Bank of India and Axis Bank.
Sure. Nitin, just coming back to this deal, the indicative sale value is around 25,000 crores. If we go with that figure, then what is your, back of the envelope calculation on the value of the assets and whether they've paid a premium or not?
See, I think it's difficult to calculate premium on this deal because, Jio, only these assets made sense to Jio. I wouldn't have been optimistic if, somebody else like Bharti or Voda or Idea would have bought those assets. Given Jio is the only telco which is rolling out 4G on 800 and 850 megahertz. So, and the spectrum of RCom is mostly in that bandwidth. So for Jio, it makes a perfect sense to acquire those spectrum assets, while the other incumbents are rolling out 4G at 1800 plus 2100. Secondly, as you know that, the Mukesh Ambani's management, which started this business, would have the greatest visibility on these assets because they were actually the team who created these assets. So they would know the actual value of these assets, including the fiber and the node infrastructure which they have. And secondly, the existing business of RCom, which includes the undersea cable business, they could definitely find value creation from that business because they could target some of the international customers like Facebook and Google, which need services all the way from US to India. Okay. So they have the undersea cable and now the fiber infrastructure as well. So it doesn't look like a premium, but these assets are definitely going to add value for Jio.
Okay. Well, finally, do you think with this deal getting done, even an Aircel may find buyers?
Tough to say. I mean, Aircel, I think, Spectrum definitely has value, and I would guess some of the incumbents other than Jio would be definitely find value to buy Spectrum assets of Aircel. Okay. But it's tough to say how much of their infrastructure assets are important for any incumbent, because that would be a duplication of such assets.
All right. We'll leave it at that. Thank you very much, Nitin Soni, for joining us. So I don't think anybody is worrying about RGO's balance sheet.
Yeah.
The past several months, it's the commodity markets that have given some bit of bad news for the equity markets. Manisha Gupta is joining in for a roundup of the action. Manisha, metals still doing well. That, of course, will be positive impetus.
All right, we'll start with metals then. And yes, they are doing quite well. Yesterday in the New York session, we've seen buying. And today, Shanghai has opened with some more follow-through buying there. So you have the copper prices trading 0.5% up. Aluminum is trading 1.5% on the higher side. Steel, iron ore, zinc, all of that has opened positive in the Shanghai markets. And just to give you a sense of numbers as well, copper prices now are up 39% in this year, holding those 4-year highs. And this is the best annual gain that they are putting in since 2010. Aluminum is trading near 5-year highs. Lead is trading near 6-year highs. You have seen steel prices give you a 38% return in this year. So it almost is between 20 to 40% on the higher side is how the metals are closing 2017 for you. And we are looking at strong fundamentals even now with the supply concerns, the China pollution crackdown, the economic growth in the global markets. All of that really has been on the positive. The crude oil prices also are trading firm, 0.5% higher in the Asian markets right now. It is about the US weekly inventory data that came in yesterday, and it is a 6th straight week of decline in inventories. The US inventories have now declined 11% in this year. And if you look at the global inventories, they are down by nearly 40% as well. So those numbers really add up to further gains coming in for that space as well.
Okay, Manisha, thanks a lot for that. Well, that's the update on the commodity space. But moving on, the government tabled a bill yesterday to replace the ordinance that amended the Insolvency and Bankruptcy Code in the Lok Sabha. Remember, earlier this month, President Ramnath Kovind gave his assent to the ordinance, which makes it tougher for willful defaulters to bid for their companies during the insolvency process. There are, however, some changes in the tabled bill. Lata spoke to the head of SBI, Rajneesh Kumar, the MD of JSW Steel, Seshagiri Rao, and Rasesh Shah of Edelweiss to find out how they read the bill and the changes proposed by the government. Listen in.
When we are looking at resolution, the credibility of the resolution plan and credibility of the promoters or the bidders. So that has to be a key consideration apart from the technicalities and legality.
Mr. Rao, did you see the new bill and the bankruptcy amendment bill as against the ordinance? Are there any material differences?
I have glanced through the just one page which has come by WhatsApp. I have not gone through carefully. Okay. But whatever I read, I am finding more of a clarificatory nature than changing the spirit of the amendment which has been done earlier. Okay.
And one more question I had for you. There were people who raised the doubt that if even one of the group companies are an NPA, classified NPA, then that group may not be able to apply as a resolution applicant. Could you get any legal vetting on this, Mr. Rao?
No, it is a very generic statement saying that if any company becomes an NPA in any group, all the resolution applicants of that particular group get disqualified. So we have to see from the definitions that have been given in the IBC and also Companies Act and the SEBI, all these three together we have to test who is the resolution applicant, who are its promoters, who are the connected persons, and whether this disqualification is applicable for those entities coming under these definitions as given under various acts. Okay. So it is a very generic statement to say that any company becoming NPA in any group, then entire group get disqualified. I don't agree with that interpretation.
Okay. Rasesh, the same question to you. What have your legal eagles told you about the disqualifications for those who can apply as a resolution applicant? will this NPA issue I mean, can it be put to rest already, or do you think it will pose a problem?
I think the way it has been drafted, it is still a grey area, and I'm expecting that a few NCLT pronouncements on this will clarify the air, because I think eventually there are, group companies which are more integrated, there are group companies which are not very integrated. So I do believe that this will, and it has been deliberately kept a grey area because you cannot be too overly specific. So in the end, it is going to be case to case on who is allowed to be a resolution applicant and who is not as per the ordinance. I think the spirit is that somebody who has not has good credit standing, has not got good credit performance in the past, should not be eligible to bid, because you only want people who bid have got good credit standing in the past. Yeah. So I think that is the spirit. It will get tested. I don't think it is as clear cut as all of us are hoping for it to be.
Okay. Well, in that case, Rasesh, are you saying that the NCLT, the NCLT has respected the spirit of the IBC beautifully until now? Do you think that will continue and therefore all credible applicants will be allowed? Or do you think this is still something that has to be tested?
I think the spirit is all credible applicants should be allowed. And eventually, it will also be a case of what are the other alternatives. Because let us say if there is only one applicant, and if the only other alternative is closing down of the company or the liquidation of the company, I do think that because the entire NCLT, the entire Insolvency Bankruptcy Code has been drafted keeping in mind revival and restructuring of the existing assets, not liquidation of the assets. Liquidation is the final option when everything else fails. So I think even that will play a role in terms of how the insolvency professional, the committee of creditors, and then the NCLT views the credibility of the applicants who come up with a resolution plan.
Okay, we have Prakash Diwan now joining us, market expert, and of course Chandan Taparia also for some F&O strategies. Good morning, Prakash. So let's start with ADAG and Relcom in particular. Do you think yesterday was a culmination of this rally, or do you see more legs to this rally?
No, I think a 90% move in 15 days, probably all the, whatever the assets could yield has been priced in. This is not much that could probably, come into the stock. But interestingly, it does have a very positive rub-off on some of the banks and hopefully RelGeo as well. Because inorganically, you've kind of, suddenly moved to a level which gears you up. I mean, RelGeo, gets geared up for a 5G launch, which can get much closer than what it was on the drawing board. So it starts getting visible actually, because the kind of network, 1,73,000 crores or whatever kilometers. I mean, that network would otherwise have taken much longer. So I think it's more positive for the other two segments, which is the buyer and the lenders rather than the seller at this point in time. So people have enjoyed the rally, so I guess they should be happy with it.
What about others who are now rising in anticipation that many bad assets are going to find buyers? I mean, we've seen vertical rallies in all the three JP stocks. We have seen it in the Amtech stocks yesterday. Metalist and Castex and everything was galloping. Of course, there are bids. I mean, no denying that. Yeah. But
so this is rather than reminding me of when you move on a prime road, like let's say Linking Road in Santa Cruz, Bandra, you will see all the showrooms with these big sale posters and banners putting up, and it's all and then this conditional up to 50% and conditions apply asterisks, which tells you that it's not everything that's going to be on that kind of a sale. So today we have a huge promise that's kind of emerging from some of these companies which have assets. And if you look at, let's say, the JP group, JP Infra probably has a very strong asset base which could get valued much more richly as compared to JP Power, though there are takers for JP Power as well, as I read in the papers today. And of course, JP Associates benefits from the holding status. But you'll have to be extremely selective. So look at the asset base, look at whether there is realizable value in that, and if that combination works, tick both the boxes. Probably it makes sense. So I would look at JP Infra. I would look at some of the Amtech businesses, not all of them, and possibly Unitech for a lark. It could probably give you something.
Prakash, morning. One stock that has come out of the woodworks now is Sun Pharma. I mean, it's the biggest gainer this week.
Yeah.
It's sitting on almost 5-6 month highs. Conviction high here, or would you stay away?
No, I think it will continue to see confidence, Sonia, because the reason is very simple. If you see the open interest and the rollovers as well, it's for the last 2-3 months, open interest has been extremely high, and it's getting rolled over because of this anticipation of the US FDA visit and the inspection. In December, we've seen the Australian regulators come and go. So that's been a very positive rehearsal of sorts for them, and then they're probably in a better place. They're better placed to face the US FDA, this thing. Now, whether it happens in Jan, whether it continues to get delayed to Feb, we don't know. So that's where the upside is linked to that trigger. It's completely correlated. But interestingly, you asked me about pharma. I think this month you'll probably see a comeback by some of the backbenchers like Lupin and DRL and all as well. So they seem to be much more strongly placed at this point in time. So if I have to pick pharma, it'll probably be Lupin, Dr. Reddy or Glenmark in that order.
Okay. One more comeback has been from IT, and TCS is at 52-week high. Wipro is there, Infosys is there. So buying IT now?
Selectively, Anuj, some of the mid-cap players look extremely promising. And if you ask me, the likes of Hexaware, KPIT, and Mindtree, I mean, phenomenal changes that are happening within the kind of space, and the disruption that had happened is finally given much newer avenues which we probably didn't factor in to some of these companies. So come Jan, and a lot of new budgets will start getting penciled in from the US spending and all. So I think IT could probably be in a slightly better spot than what we thought. Particularly the niche players, the ones who have specialization, and then like KPIT, very specialized. You go to Mindtree, has focused on one of the verticals out of all the three, and say, okay, we'll continue to grow there. So I think that could probably surprise. But I'm not too bullish on the big ones, the top three, top four.
Okay. I just want a word from the technical experts if they are there, if Ashwani is still listening in. Ashwani, can we?
Yeah.
Okay, Ashwani, there's quite a vertical rally. I know you don't like to indulge in stocks like, the beleaguered NCLT kind of stocks, but look at the rally, Relcom 145% higher in the month of December, JP Infra 54%, Unitech 32%, Jaiprakash Associates 30%. I mean, that's a bunch. Even GVK Power is up about 15%. Is there a shorter term trade in any of these?
See, we saw what happened with PSU banks.
I agree.
You had one news and the business doesn't change. So while, you can get an RCom type rally in GMR or JP, etc., but I don't think they are multi-baggers from here till their business picks up. So that way, I think I have a call on GMR Infra. Things are beginning to happen for these beleaguered companies. Either some, guardian angel is coming or something is getting resolved. So that way you can have a 5% allocation to these stocks, but you can't go overboard.
Okay. Prakash, I wanted your thoughts on real estate companies. Yesterday, SEBI relaxed some of the norms for investment in REITs. I mean, of course, it's been 3 years since REITs were launched. Not a single REIT has been listed. But nevertheless, you like any real estate companies?
No, I think, I mean, it's a pocket that's surprised all of us this year. And then going ahead, I mean, things don't work like on a year-to-year basis. If the momentum is there, it could continue. And then especially the likes of DLF are looking extremely well poised. You saw real estate is as cyclical as maybe sugar or metals or paper. And what's happening is, while there's nothing happening on the ground in terms of inventory pickup, the anticipation of money, especially private equity kind of serious big money coming in, is already there. I mean, you saw Kolte Patil attract some big investments in the project. It wasn't in the company. So same things, DLF has seen its promoter commit a lot of funds. I mean, you take any cyclical sector, and when the promoters start putting in money where the mouth is, things are looking to change. So I'm quite positive on some of these well-established names. Out of the smaller ones, you could probably look at a Arihant superstructure, which is a Bombay-based company, new Bombay-based company, and they are extremely big into affordable housing. Take some of the ancillaries, the guys who supply services to some of these real estate guys, they'll benefit irrespective of who executes orders, gets financial closure. So the capacities and Vascon engineers of the world, that's the pocket to look at. I think there's a lot of activity which will happen in the quasi-real estate plays rather than the Godrej properties, DLFs and Sobhas of the world.
I do want to come back to this, the home improvement space as well. But before that, let's finish our F&O strategies as well. Chandan Taparia of Motilal Oswal is with us. Chandan, the Jan series, traditionally a happy series for bulls, probably because of the pre-budget vibes. How are you playing it today?
Yeah, it seems that season is likely to be very cheerful. Belated happy birthday and happy new year as well. Talking about the market, the option data indicates that range is shifting on the higher side. In fact, the fresh call writing and the maximum call wise is happening at 11,000 and 10,700. That is giving an early sign of indication to heading towards new high territory. So I think the stock specific mid-cap and heavyweights counters likely to do well in this series. So I have selected a couple of stocks based on their price pattern and the open interest and rollover database. First is buy on ICIL. The stock has seen rollover of 91%, and after a long time this stock is bottoming out. It performed a triangle breakout pattern on the last trading session, and the holding well above is 50-day exponential moving average. So expecting 5 to 7% rally in the counter, one can buy with a stop loss of 122, and I am expecting a move towards 134 kind of level in the counter. Second trade is the pharma pack, that is the Dr. Reddy. As per earlier discussion, we have seen the strong rollover in most of the pharma counter, including Sun Pharma, Dr. Reddy. Sun Pharma has seen 90% rollover. Dr. Reddy also seen the 89-90% rollover. So again, the buying interest is emerging in the pharma counter, and traders are carrying their long bets to the next series to drive the momentum. So Dr. Reddy has formed a positive price pattern. Multiple price pattern is happening at current juncture, including inverse head and shoulder and cup and handle price pattern. So recommending to buy with a stop loss of 23.95 and looking for target towards 2500. We have positive view on the auto ancillaries as well. Bharat Forge is likely to do well to hit the new high territory, while we have positive view on coverage on Mothers and Sumi as well. The stock has taken support at its 50-day exponential moving average. That's why expecting further rally in the counter. We are recommending to buy with a stop loss of 365 and expecting it to head towards 390 to 400 kind of level. Those who are interested to look at the option can be with the selective metal counter, and here we have bull call spread in the Tata Steel. Buy 740 call, sell 760 call. One has to pay the premium near to 8 rupees, and stock moves by 2 to 3% as per the expectation. Then one can get return near to 6,000 to 7,000 rupees per strategy.
Okay, thank you very much for all that, Chandan, and here's wishing you a very happy 2018 as well, and everyone at Motilal Oswal. Well, actually, Motilal Oswal's initiation of buy rating in Motherson Sumi with a target price of 458 was on our flashes. We did refer to it. Okay, I'm just coming back to the big story of the morning, with which is RelGeo buying or signing a binding agreement to buy the telecom assets of RCom. Ronit Ramesh is here with a roundup of what a couple of brokerages have made of this development. Ronit.
So I'll start with Morgan Stanley. They've come out of the note saying that the acquisition of RCom's telecom business is synergistic and going ahead it will be beneficial for Reliance-Jio. They're saying that the lower cost and also this will raise clarity on the growth OPEX going forward because they have to spend much less. Remember, Reliance-Jio is one of the top renters in terms of renting Reliance Communications towers, wherein they pay around 1,500 to 1,600 crores per year, and this is also EPS dilutive for them going ahead around 1 to 3%. Whereas Motilal Oswal also come out of the note on saying that this deal is at a premium compared to deals that have happened. Remember, Bharti Airtel acquired Tata Teleservices business for around 20,000 crores, whereas they have Reliance-Jio agreed to buy around the telecom assets for 12,000 crores as well as the towers and fiber assets for 12,000 crores. So they're saying this is a little premium, but this assets remain strategic to Jio and hence command a premium for them.
Okay, Ronit, thanks a lot for that. We'll